We're here at the Mining Journal Select Conference in London. I'm here with Colin Hamilton, Managing Director of Commodities at BMO Capital Markets. Colin, we've heard a lot about the pressing need for critical minerals as part of the transition. But the question I have for you is, why are we not getting the investment needed to supply those minerals?
Part of the challenge is projects are hard to do. It is really hard to go and build a mining project. It's arguably harder than it has ever been. And with that, while everyone is of the view that yes, we will need these, no one's sure on the economics, no one's sure on the timelines involved, and policy is only starting to adapt. There's been a lot of countries talking about critical minerals for a while. Not many have actually been putting any money to work, with the exception arguably of China, where we have seen a lot of investment, and that's why China controls so much of the value chain. Now, if we look at it over the next few years, there's no doubt there's going to be a need to alleviate some of that dependency, and that's why you are now seeing governments start to put a little more policy to work over the coming years.
And I suppose to flip that question around, what could be done to unlock the level of funding that's needed and investment that's needed?
I think an acceptance of the fact that mining companies are taking a lot of risk at the moment, and the ability to be able to fund that risk adequately and guarantee offtake. I think if you find that we've seen things like car company OEMs come into this market, say, well, actually, I can get all the materials I want. I don't need to worry about this. Now, I think in future years, they will have to worry about that a lot more. So giving some sort of agreement where you get cap and collar style arrangements where it guarantees a price to a certain extent, de-risks projects quite significantly. And I think that will be key. The other thing is getting capital intensity in check and going after the easy stuff. That's what the mining industry should do, rather than shooting for the moon is nice, but we're trying to fund the transition with transitional assets, and I think that will be important.
And we've of course seen China have a very successful critical mineral strategy. What's your view on some of the other strategies that we're seeing being put out in the EU, the US and other jurisdictions?
It's interesting, the US Inflation Reduction Act is typical US legislation, heavy on money, maybe missing a little bit of the point. Not so much of that has been put to extractive industries so far. It's easier to fund manufacturing and reshoring, and politically that's much more acceptable to do rather than getting source of the raw material. I think there's still a view that if the market needs it, the material will be there. I think that's somewhat outdated. The European Union has taken a slightly different approach, trying to form its critical minerals club. Unfortunately, there's no real money behind that. So it's like, well, come and be our friends and we'll get it together. And I do worry that it just takes a while for that policy to have an impact. And I think it's all well-meaning, but we will still be dependent on China for critical minerals for the foreseeable future.
And when we look at copper specifically, there's obviously a great need for this as underinvestment. Is it just a case at this point of sitting on our hands and waiting for 15K copper or whatever? Or is there another way that the market can start to provide new metal before then?
I think then it's an interesting thing. I would say that if you ask a mining company what sort of price level is needed, they'll always give you a level that's $1,000 a tonne above where we are today. And I think it shows that building projects is hard. So there's an element that we'll get some projects through, you always will, but I think that the supply will generally disappoint what we need. I am very interested in some of the new leaching technologies coming through that can supply some incremental assets. I also think syndicating and partnering on even small to medium scale assets is important. Spreading that risk across balance sheets makes it much more acceptable for shareholders.
And do you think we are always going to be dependent on those very large tier one projects that drove supply in the past, or do you think there's potential to look more at more varied projects?
I think we need them both, is the answer. I mean, we need to keep the Escondidas of the world going. A big decision for BHP coming up to keep Escondida at current levels, world's largest copper mine. They need to invest in a new concentrator. And that's the nature of this industry. You have to keep investing capital. But then we'll also start to need to see new projects come through. And I think that those projects will naturally be maybe dilutive to the existing ones that we've seen, but that's why you need to see higher through-cycle pricing to justify that investment.
That's great. Thank you very much.
Pleasure. Thank you.